Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is currently testing and rejecting a quite strong area of previous monthly support here, again here, again here, and again here, which lasted and acted the last time as support here after the market broke it to the downside. At that point, all that previous support became resistance at this level, and we can notice in fact how the market tested it quite precisely and started rejecting it to the downside. So at the moment, from a monthly perspective, the market is currently testing a historical level of previous monthly support, which is now turned resistance. We can also notice that in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we definitely have at least the possibility of seeing a bit more bearish price action for a retracement to the 0.32 of the Fibonacci taken on this monthly impulse. So a bit more bearish price action could be created away from this zone. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, however, we can notice how we have a market which is currently testing and rejecting previous weekly support, which is now turned resistance. Now, from here, this previous move to the upside was created, confirming this area as support. That has now been broken to the downside, and this previous support is now turned resistance here. And as the market is testing and rejecting previous support and resistance, we could expect more bearish price action to be developed away from this area. Going down on the daily time frame, what do we have? Now, from a daily perspective, we currently have a market which is kind of trapped inside of a range. We can see how the market has just been consolidating inside of this zone and essentially creating a triangle formation, which in this case is trending to the downside. So this would essentially, if the market continues inside of this pattern, this would end up being a falling wedge. And this is usually an exhaustion pattern to the downside, from which then the market is supposed to create a rejection to the upside. However, as we have already seen from a monthly perspective, if you remember, that is already what we would like to see. We would like to see a bit more bearish price action for the market to reach the 0.32 of the Fibonacci taken on this impulse to the upside. And then from here, this is where we would like to see a potential rejection to the upside. So it is definitely a possibility that the market might continue trending a bit lower before then creating the rejection to the upside. Now, in a situation like this, what we would like to see is for the market to at least break the daily horizontal structure. In this case, that would be this previous daily support, which has been acting as support all across this zone and is still acting as support here. Now, if the market will manage to break this level to the downside, so essentially create a daily close below the zone, at that point, all that previous support would become resistance here. And if we do get a successful break below the support after a break on the retest of this previous support and resistance, this is where we would have quite good probabilities to see a potential rejection to the downside, essentially for the market to complete this impulse correction and impulse pattern to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, what we can see is that with the last reports, we have seen a decreasing of the net positions going from minus 5k to now minus 18k. If we look closer, we can notice in fact how longs went from 40k, shorts went from 40k all the way up to 54k, and longs went from having kind of a peak here at 43K down to now 36K as we have at the moment. So overall, we can see how the pound is getting decrease in longs and increased in shorts, making it weaker from an institutional perspective. So there is the possibility for a potential break below the support. And if we do get a break after a break on the retest of this previous support turned resistance, this is where we would have good probabilities for a rejection to the downside. So how we could be approaching such a move. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I definitely suggest that you go and check out the TransparentFX website at transparentfxtrading.com. Here you have the possibility to get access to my entire course. In fact, as soon as you enter the website, you will see that I have a complete video breaking down exactly what you get in the all-inclusive mentorship program. You will see that you have the possibility to get access to all the courses, so risk management, day trading, swing trading, scalping, position trading, one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface, the account funding program, in which essentially we give you a complete scholarship in which we pay for you to apply for any challenge that you want to any brokerage after you have graduated. And if you continue to scroll down, you will see that you have the possibility to join directly here from the website to start your application and become a student here. So I really suggest that you go at least to check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.